Hello and welcome to the Wednesday check-in powered by the Gokhstein News Network. I am your host, Landy. Today is July 30th, 2025, and we did have some pretty big economic events happening today with the quarter-over-quarter Q2 GDP estimate coming in, as well as the Federal Reserve rate decision. And I'll just kind of get it out of the way. Growth up 3%. What was the primary driver behind that? It was primarily consumer spending, and then the shrinking of the net exports number, where we did see a decrease in overall imports. This is something that I've been talking about for a while. We've been tracking for a while as well, just waiting for the GDP numbers to kind of come in, and now we finally got that softening in imports. And, what was driving the excess imports in Q1 was the lead up to the tariff implementations. And of course, now we've seen that has cooled down, and now we have GDP back on the upswing. So no rate cuts. I wasn't expecting any. I'm not sure why many were. There was no real incentive for the Fed to cut at this point. But it does appear as though they're laying the groundwork for some cuts coming up, whether that's next month or September, October timeframe remains to be seen. And realistically, we can cut into normalization, because we are seeing mixed signals still for the economy here in the United States, but it's an improving economy, and it's not something that I think that many of the pundits expected to see. Obviously, we had a big beat in with the 3% number on GDP in the Wednesday release of numbers. And tomorrow we still have some more economic data coming up. So Thursday there's going to be some more, but rates stay the same, and we had a nice beat on quarter-over-quarter growth rate for GDP. And what does that mean in the grand scheme of things? Not much. There was no real change based on all of the things that we've been talking about, which means that, the markets were not spooked by any of this information. So it's just kind of business as usual. And we did see Bitcoin actually hit one of our key areas to the downside in the daily candle here. So I'm going to zoom in a bit here. And I've been talking about the 115,700, the bottom side of the range. We got the first bearish candle after putting in the all-time high, which, was, to be fair, this is an ugly inverted hammer, indicating at minimum we were going to see a local correction to some sideways. And, well, that's what we've seen. And that has kind of defined the swing low of the range. We haven't seen closes below it. Yes, we did get some wick fishing and liquidity hunting out of the bottom side of the range. But realistically, what have I been looking for? I've been looking for exactly what happened. Kind of stay in the bottom side of the range as long as we're seeing closes come in above 115,700. It looks good. And preferably you want to see those closes come in above where yesterday's candle did close above. And that is right around the 117,800 to 118 area. Now, you can see that Bitcoin's loading up here. It's getting ready for a larger move. Do be aware of fake outs to the upside or downside before the real move gets started. So let's talk about a little bit of criteria here. If Bitcoin does break down, hold on one second, sorry. If Bitcoin does break down below the 115,700, if we haven't already seen a swing of the low there right below 115 at 114,750, I would look for that to be the next area. Could it swing lower? Absolutely. But if we start closing below 115, it does increase the chances of not just running this low, but if we start to close outside of the 115,700 area, we would be below the lower second standard deviation. We would be getting expansion into this next low at 114,750. And any closes below there would start to paint the picture for continuation down to test the next big area here at 112. Obviously, this is a big weekly area. This is the last weekly higher high. And this is between 112 on the swing and that 109 close. That's a bigger area that does have some daily areas of interest in it, right around the 110 area being a key level within that bigger weekly zone by that last weekly closing and swing high. Bulls don't really want to see this zone pushed too much on expansion because that would start to endanger the bottom side at 109. And then we have to start paying attention to this 108 close open level here on the daily, the last daily consolidation before the big move up to the current consolidation. So that essentially, if we started to see an expansive move on closes below that 114,750, we're looking at expansion into a retest of this larger area. And bulls don't want to see this area reclaimed as this, from this consolidation to resolve into this area. If that were to happen, bulls want to defend this area heavily. And I suspect that we would find a lot of liquidity there. And I do think even if we saw like one-shot candles down through this range, we're going to probably find a lot of, we'll probably find a lot of stops and a lot of liquidity. So it could very easily be front run as well. It's all about closes. Pay attention to lower term time frame closes below 115,700 to possibly go down and test this low 114,750, and then any daily closes in here or lower going to look like expansion down to the next bigger area. To the upside, very, 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 very clear picture here, right around the 119, 800 to 120 area. We start seeing closes above there. We would be getting expansion back into this lower high swing over here at 121. This is the same outlook as last week. If we start to see closes above 121 on the daily, that would be expansion above the upper second and even the upper third in this case. And that would be expansion back to the highs at $123,000 to $125,000. I've shown that plenty, where I'm coming up with the 125. We can glance at the weekly really quick, but anywhere above the 123 to 125. So basically back to the all-time high. You want to see closes above there. You want to see 125 closed above as well to start pushing up 128 to 130. That would then, that's a big major area on longer term timeframes. And of course, being a macro area of interest from the prior cycle, high to low on extensions. So it's also a local area. Anywhere above there, by the way, you can reference Monday's video, as I've shown this over and over again. But there is local fib extension structures above 128 to 130. There's right around 138 to 140. That'd be the next big area. And then, of course, above there, there's even a nice fib lining up at around $147,000 to $150,000, depending on your on the chart that you're charting, whether it's going to be spot or perps and stuff like that. So yeah, not too much has changed. Price still sitting in the range. This is going to resolve with a bang. Just be aware of fake outs. You're looking for closing confirmations, above 121 essentially to go and run 123 and higher. You want to see continuation above that 125 to really get a move going. And realistically, closes below the 114,750. That would be signaling, a nice move to the downside on expansion. But this is going to, we'll see how long this goes sideways. But we've got a really big compression on price action here. So I do think that a little bit of fake out here and there, a little bit chop around the range, and then look for close over close resolution of this range with expansion. And there's a few other things we can check here. Again, there's no real big bearish divergences here. We are in a bit of a consolidation trendless structure here. It's always the trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear. Just play the range, wait for one side to break, essentially. We're right around the edge of the bullish control zone for RSI here. We would start to see, based on where we are here, there's not really much going on for bullish divergence even there. But just be aware if we do break out back to the upside into the bullish control zone of RSI here, which is right around 120, then, just be aware of wherever the next highs come in. That just pay attention to any trending, new trend, bearish divergence. Some of the prior trends, bearish divergences are already corrective and already played out within this range. So not a big deal. Momentum did shift back to the upside, closes above 116,850. We'll keep that pointed up for the Tuesday candle. Of course, I'll be back on Wednesday after the close to talk about this stuff. And yes, I might as well just take a look at the weekly. Weekly is up at 127. If this candle turns green on the weekly, this is going to be lined up right there at that 128 to $130,000. So looks good. I probably should have taken all the flags off here, for the for the actual events. My bad. But yes, I would pay attention to some of the economic numbers coming out tomorrow as well. as at the end of the month here. Personal spending, core PCE, inflation metrics, and personal income. So that's going to give us a good view for kind of what we're looking for headed into the next quarter, right? So and just keep track of this month over month until we hit Q3. And so far, so good. I mean, we're already well on our way, I think, to improving, but we'll see if that holds true, if I'm right about that, from what I'm seeing in terms of economic data. So Q1, Q2, we're in Q3, wait until Q4. It's going to be fun. It's going to be fun. So understand, quarterly is going to be fun. This is going to be fun to monitor. We've got 2 months and 1 day until the end of the quarter. And this is going to be a fun one. And the only reason that I'm bringing this up, and let me get rid of some of this stuff on the chart here, is we have not yet kicked off expansion on the quarterly. And I know that some of you, if you're sticking around till the end of the video here, some of you might remember what I've been pointing out with bands. We have not hit Bollinger Band expansion yet. This entire bull market, we have not hit Bollinger Band expansion yet. And what we need to see is close over close above the upper second standard deviation, right there at 110. So 110, yeah, it's basically 110. That's going to be fun to watch. But another month down. We'll have 2 months to go on that quarterly. We'll check on Friday. We'll check on this monthly. You do want to see closes above 120. That would look good. And you see that we're also in a compression, bullish compression on the monthly. So I'm not seeing the doom and gloom that some are, not yet. So prepare to have some fun. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. I'll see you on Friday. Take care.